This is Angela Dunn coming to you from Charleston, South Carolina. And we are going to present how to use a debt fund effectively. When I say we, I mean me. All right, a little bit about me. I'm the managing director of Rehab Wallet, which is the lending arm at passiveinvesting.com. I've got just a little over 3 decades of corporate executive leadership experience. Just shy of 5 years in the private lending world. And as of June 15th, 3 years leading this amazing team, debt fund lending. And on our anniversary date, we celebrated, we're just achieved a little over 1,000 loans and almost $201 million in lending. Super excited about those benchmarks that we've achieved. And to dive right in, I want to share with you why, how, and what we do here at Rehab Wallet. And one of the reasons why it's so fulfilling for me is because the why, how, and what aligns with my personal why. But Rehab Wallet's why is to become the flipper's lender. How we do it perfectly aligns with my personal how, and that's making decisions with fairness and consistency, communicating with optimism, clarity, courage, and we persevere to improve, not to achieve perfection. We treat others with kindness and respect always, and we collaborate as a team because together is better. And those are the core values at Rehab Wallet. What I do is I support a team of deeply engaged, high-performing, service-oriented leaders that efficiently lend millions of dollars to experienced real estate flippers, predominantly in the Southeast. How passiveinvesting.com uses a debt fund, or why the lending arm was created, is to create a short-term investment option for the otherwise more long-term investors or long-term income that the other parts of passiveinvesting.com provide to their investors. So again, we're the short-term income bucket, if you will, as opposed to more longer-term options, which are historically, 5 to 7 years. It keeps your money as an investor compounding instead of just sitting, not earning anything, possibly in a alternative account, and achieves about a 15% APR. So we're real excited about what we're able to offer our investors. So that's how passiveinvesting.com uses Rehab Wallet as a debt fund. We pay our investors about 6% up to $100,000. And then when our investors invest $100,000 or more, they begin earning 8% return. Distributions are paid monthly. There's a compounding feature. And we abide by the 506C rule or solicitation. And obviously within that, it creates just lots of opportunities for our investors. And again, that alternative option. How we achieve that 15% APR is through an interest rate. Currently, we charge our borrowers about 13.75% APR and 2 points, and average somewhere around a $2,000 lender fee. So there are 5 pillars within our lending business. The first of which our partners perform for us, and that's raising the capital. So the partners at passiveinvesting.com, that's their primary role, and they do an amazing job at this. Since inception, they've raised over $112 million that have allowed Rehab Wallet to achieve that 200 million goal. And the additional 4 pillars of lending are origination, processing, servicing, and compliance. And those are the 4 pillars that our Rehab Wallet team is responsible for. So the first pillar we'll just talk a little bit about, because ultimately the goal and the bulk of our conversation today will be around how Rehab Wallet effectively uses this debt fund. But I want to give you some highlights into these 4 pillars that Rehab Wallet is ultimately responsible for. So origination is the first that Rehab Wallet handles, and that involves obviously marketing. We sponsor events. We have an amazing social media team that guides us through webinars like what you're experiencing and participating in today. Networking, our team participates in multiple real estate investor groups in person, and then speaking opportunities, whether it's on webinars like this today. And again, I want to thank passiveinvesting.com and our founding partner, Kelly Garrett, for giving me the opportunity to spend this time with y'all today. So marketing, networking, and speaking are some of the ways, and certainly the primary ways, that we have opportunities to originate loans. This slide is just an example of a loan term sheet. We're not going to go into a whole lot of detail, but at the end of the webinar today, I will share with you how, if you're interested in taking a deeper dive into this topic, how you can learn more. But this is a sample. Obviously, our borrowers' information has been redacted, but just shares with you, it's actually page 2 of a 7-page term package that our borrowers receive. And it has all the basics of a term sheet, of which our director of sales has created. Excuse me while a couple of my screens hop around there. All right, the next pillar that our Rehab Wallet team is responsible for is processing. And the goal here or objective is to get the lender and the borrower to the closing table. Again, effectively and efficiently. They're behind the scenes collecting the documents from the borrower, which include insurance documents, articles of organization, the operating agreement, the scope of work for the rehab, and attorney information. Our processor works directly with the law office or title company to prepare and ensure there's a clear title, and then they prepare the mortgage, the deed of trust, and the promissory. The next pillar of lending that, again, our Rehab Wallet team is responsible for is servicing. And that involves collecting payments from our borrowers. And what we're sharing with you is how Rehab Wallet operates their debt fund. Obviously, for those of you that may be interested in either replicating or launching a similar business model, or maybe already have a debt fund of your own and just looking for some additional best practices. Again, what we aspire to share with you today is how Rehab Wallet has been pretty darn successful, but how we achieve this. So collecting your payments may be in different forms, but we collect them via ACH. We draft that payment or pull that payment from their account. Also within servicing, we collect late payments or if there was insufficient funds, we follow back up on that. And we also review and approve draw requests. And then the final pillar is what we refer to as compliance. And the majority of this occurs after closing and as the loan is being paid off. But we close out that file. We'll maintain it for as long as we legally need to, and as long as up to 2 to 5 years, if that's called for. And we ensure that the loan or the mortgage is satisfied. That's a critical step. So want to ensure that it is satisfied, and that way we're taking care of our borrower when they pay it off, because ultimately that's the loan, the goal is for them to successfully pay off the loan. All right. So next, and for the really latter half of our webinar, I want to talk about what my primary role has been within Rehab Wallet. And the most important thing, no matter what the organizational structure is of your debt fund, and to start with, you may not have a full team. You may be the primary person and you're wearing lots of hats and performing lots of roles. But within Rehab Wallet, we again have been in business now for 3 years as of June 15th. And my primary role is to take care of our team. That's ensuring that they have the tools that they need, the training that they need, that they have the time that they need, meaning that we've given them a realistic amount of workload, that they have the skills that they need, and often that's determined at the time of hire or job placement, that they have the capacity to learn and stretch as we grow and expand our business, and they have the desire or the curiosity to fulfill that role as our business model grows. During the first 6 months, Rehab Wallet loaned out about $10 million. And this past year in 2022, we achieved a goal of 97 million. And in 2023, we are on track to loan out an additional $125 million in fix and flip loans. So there's a lot of growth that's occurred. And again, my primary role is to take care of our team. One of the ways that I take care of our team, both on the Rehab Wallet side as well as the PassiveInvesting.com side, is to ensure there's a balance of funds. So the next slide just shares with you what our organizational chart currently looks like. And if I did not mention it already, I'd be remiss, but Kelly Garrett is our managing partner. And she had the vision after, almost 18 or 19 years of flipping in the Charleston, South Carolina market, but also a decade or more of owning a mortgage business. So having both of those really critical experiences, professional experiences in her background, she launched Rehab Wallet. And as the managing director, I have 3 primary reports: the director of operations, my right hand, Harris Jones, Anna Teixeira, who's our director of sales and is responsible for all the originating, and Amanda Myers, our director of compliance. Additionally, we have Cassidy, who is our lead loan processor, Kelly Robinson, who is the operations manager, Stacy Foster, who is our finance coordinator and plays a liaison role regarding the balancing of the funds. And Jennifer's our newest teammate. She is an admin associate And while she reports directly to me, she supports the entire team. But a quick glance into what our organization currently looks like as of April of this year. Guys and gals, as I move through this presentation, if you've got any questions, feel free to submit them, and I'll get to those here shortly. But the next portion or primary role that I play above and beyond taking care of our team is ensuring that our funds are balanced. So there's really two primary buckets that have some secondary buckets. Obviously, funds that are coming into our account, which would include escrow or investments, funds coming from either existing investors or new investors. And again, remember that capital's raised by our passiveinvesting.com partners. And then the second source of incoming funds involves what we've titled or nicknamed recycle. And that is when funds come in from loans that are paid off. And so those are the two primary incoming funds. And what you're currently looking at is a tool that we created, and it's called our cash tracker. And it shows you at a month at a glance. It's actually our existing June cash tracker. And it shows you a week at a glance for the month of June and a day at a glance. And this is the primary tool that we use day in, day out to ensure that we are prepared not only for the month of June's business, but also each respective week and each respective day. So I shared with you the first bucket of incoming, and then the next bucket is obviously outgoing funds. And there are three secondary categories within the outgoing funds. That includes return of capital. And return of capital, if it isn't self-explanatory, is when investors have decided, you know what, this short-term investment, I now want to relocate my money to maybe one that has an even higher return and is a longer hold. So our investors can request that money through our passiveinvesting.com managing team. And our director of finance would then place that request in the queue. In our PPM, we communicate to our investors to allow up to 90 days for that return of capital. I'm super proud of not only our director of finance on the passiveinvesting.com, but how our business model has operated up until now. Because historically, we've been able to get those funds back to our investors in about 30 days or less. But again, that's the return of capital is the first line item you see on our cash tracker, of which potential outgoing funds need to be balanced. The second is wires, and those are when we have new loans closing and we're wiring them because we have determined that a loan is clear to close. Our lead processor and our operations team has determined we're good to go, and that gets the wire all set and scheduled to go out. And the third within the outgoing funds is the review and approval and funding of a draw request. So again, we've got two secondary funds coming in, escrow or new funds that are being placed, recycle when a loan gets paid off successfully, and then outgoing, whether it's an investor's request for return of capital a wire for a new loan or a draw request. And how we've been able to effectively and efficiently plan for this, not only weeks in advance, but even do further forecasting months in advance, is we've utilized a best practice of determining that when certain dollar amounts have an average over a 13-week period of time, when that 13-week period of time determines that either a particular category, whether it's incoming escrow, recycle, draws, wires, when that average starts to tick up, or if it were to begin to tick down, we do use a 13-week time frame to average that and determine that. All right, we've got one question from Marty. It looks like, is Rehab Wallet an exclusive passiveinvesting.com partner? We are exclusive there with passiveinvesting.com. There are opportunities for co-GPs though. So Marty, if you just want to contact me at angela@rehabwallet.com, then I can put you in touch with our Director of Investor Relations and discuss that even in more detail with you. That's a great question. Thanks for submitting that. All right, so again, just an overall, our primary tool, rather, the cash tracker, and the second most important role that as the managing director, I contribute and play within rehabwallet.com. Now, I would be remiss if I didn't give you just a little bit bigger picture of the primary roles at rehabwallet.com. While my goal is to ensure that the team is taken care of, the team then ensures that our borrowers are taken care of. And the domino or residual effect, if you will, is when our team is taken care of and in turn takes care of our borrowers, then that ensures that the debt fund is effectively taken care of. And when our debt fund operates in the desired manner, that fulfills the need of our investors, or the debt fund then in turn is effectively taking care of our investors. So when I ensure the team is taken care of, the team then ensures that our borrowers are taken care of, and that in turn ensures that our investors are taken care of. So while we've spent about 30, not quite 30 minutes in talking about how to effectively use the debt fund as an investment resource, if you will, we take a deeper dive into this process and how Rehab Wallet has effectively done this for 3 years now at our private lending intensive training. We had a great event back in January of this year, and we have an additional one already scheduled for September 18th and 19th in Columbia, South Carolina. For anyone that is interested, I will share now with you a QR code, and you should be able to scan that and sign up for this lender intensive. Looks like we got a couple more questions coming in, so I'm going to leave this slide up where you can learn more about effectively operating a debt fund. Let's see, we've got a question from Michael. What is the cost of capital to borrow from Rehab Wallet, and what does Rehab Wallet take? We're only in first position. So that helps us not only reduce risk for our investors, but ultimately take care of our investors. So we're only in first position loans, and our cost that we lend out is currently at about a 13.75% interest rate. And our director of sales has the autonomy and is empowered based upon the asset and the experience level of our borrower to flex on that. But hopefully that answers your question, Michael. If not, feel free again to email me and I'll put you in touch with someone that can provide even more details on that, Michael. But thank you for that question. All right, I think the next question was, what are the typical rates of return for co-GPs? Just like we make the decisions on what those terms will be for our borrowers, and that predominantly relies upon the asset, it may depend upon the strength of that co-GP. So it's a great question, Frenchie, and what I can do for you, while I can't speak to that directly, that's not in my immediate AOR, I'll find someone who can answer that question for you, Frenchie. And that would typically be our Director of Investor Relations, Rob Gallo. And if I think most of you guys are probably familiar with our website at passiveinvesting.com. And you can contact our Director of Investor Relations there, Rob Gallo, who is an amazing partner. All right, looks like Jed has a question. Are there any different terms given to investors for different term lengths? That's a great question. And actually, as of April 1st, there are two options, because when our investors invest $100,000 or more, they do earn 8% as opposed to 6%. So when that investment is less than $100,000, our investor can expect to earn 6%. But if they invest $100,000, they can expect to, as of April 1st of 2023, they can earn 8% return on that capital. Great question, Jed. All right, Michael, another great question. While we do not have a max loan amount, we make those decisions based upon that balancing act. So, it would in part be determined at how much we have available to loan at that time frame, but also the borrower's experience level and the asset. For example, if the loan size is larger than our average, and our average loan size has historically been right around the $205,000 mark, but we have done some larger loans. We often will do those at a lower loan to value or LTV. So great question, Michael. Thank you for that. Hopefully that answered it. Jed's got another great question. Thank you. What is the percent of bad debt look like historically over our 3-year in history? Well, I'm super, super proud and appreciate this question, Jed. So far over our 3 years, we have had one loan that we've had to foreclose on, but Rehab Wallet still was able to fulfill all of the interest and pay our investors. Plus, we netted $47 on that loan. So it's the business model. The business model and how the private lending that our founding partner modeled her loans, and her background and knowledge of the Southeast, specifically the state of South Carolina. And then even within that market, a large percent of our loans are in the Charleston, South Carolina area. But we don't currently have any bad debt. Our compliance team, our founding partner, Kelly, actually, our entire team is involved in considering additional best practices so we continue to mitigate risk for our investors. But I would refer you back to, my primary goal is to ensure our team is taken care of. The team ensures the borrowers are taken care of. And when our borrowers are able to successfully exit their loans, that in turn takes care of our investors. And just because those best practices have worked for the first 3 years doesn't mean that they'll work for, into eternity. But that's why our compliance director and, quite frankly, all of our team members are empowered to share their ideas that could contribute or cause risk, and why we are constantly considering and looking into ways that we can further mitigate risk in the future. So thank you for that question. My next question in the queue is, how much is the fee for this? And I may need a little bit more clarification. The fee to borrow, so like the lender fee, if you want to borrow from Rehab Wallet, ranges. It would depend upon if we are funding the draws, which become a little bit more service intense, but you could expect probably a minimum of a $1,000 lender fee, and possibly, depending upon the size of the rehab, a lender fee that could exceed $2,000 or $2,500. Again, our director of sales, Anna Teixeira, has the autonomy, the skills, the background, and the knowledge to make those decisions. And our team also understands if they ever need a partner or want to take a partner, we've got lots of qualified folks to help them make important business decisions. So great question. If for some reason there's a follow-up question there to how much is the fee for this, feel free to email me and I'll try to get that follow-up for you. All right. Frenchie, is there a referral program in place, and do you provide collateral loans and HELOCs? We do not provide HELOCs at this time. All of our loans are collateralized by an asset. And currently, our max LTV or loan to value after repairs is in the 70% range. All right. Hope that answered that question, Frenchie. Thank you. Brantley has the question, how long does it take to get paid back as an investor? So our return of capital requests, when an investor requests a return for capital, our PPM indicates up to 90 days it may take. But historically, during our first 3 years, we have been able to return capital back to our investors in less than 30 days. And it's certainly possible. There's been a rare occasion of more than a month or so, but those are quite rare. But we allow for up to 90 days. But our goal at Rehab Wallet and PassiveInvesting.com through this debt fund is to exceed our investors' expectations, not just achieve them. So I hope that answers that question. Although the PPM allows for up to 90 days, historically it's taken much less than that. So thanks for that question. All right, that was a lot of great questions in the queue. It does appear that we've gotten to all of them. If for some reason there was some follow-up questions and you would like to submit those to me, feel free to email me at angela@rehabwallet.com. Looks like we may have an additional question or two that was in our chat. So I think we got just a couple more minutes. I'm going to try to get to a few more of these. Looks like Diane had a question about the organizational chart and that the director of investor relations was not on that. That's a great question. Our director of investor relations is Rob Gallo, and he is actually a part of our passiveinvesting.com team. The organizational chart that I shared with you is specific to Rehab Wallet, which is the debt fund side of passiveinvesting.com. So hopefully that answers that question. But Rob is an amazing partner of ours, specifically mine, and Rehab Wallet would not exist without the directors, the investor relation team, the finance team, and the managing partners at passiveinvesting.com. Had another question from Tim. Do we provide loans for RV parks? We have done some, we have funded some loans for mobile homes that are detitled. But if you have something specific, I would encourage you to go to rehabwallet.com, submit an application, and Anna Teixeira, our director of sales, will work directly with you to answer specific questions about whether or not your asset may qualify for a loan with Rehab Wallet. Great questions. All right, I've got another minute or so. Let's see. So it looks like maybe someone scanned our QR code possibly, and there may be some information that's not up to date. So we will get that information, whether it's pricing or dates or location. We'll get that information up to date for you. Thank you so much for that. So, Kevin, this is a great question. Just inquiring about, do the investors have to worry about the foreclosures themselves? That's a great question. You know what? And I have not spoken to how the debt fund operates, and our investors' funds are not tied to just one property. They are spread across the entire portfolio. We currently have approximately 250 loans, give or take a handful or so. So no, the investors don't have to worry about a specific foreclosure. Their investment is spread out among the entire portfolio. Great question. I think the rest of those questions have been answered. I've got one more. Let me see if I can make time for this one. My business partner and I are starting a debt fund. We've got several investors, about somewhere between 5 million and 20 million. Is this something you can assist with? We would love to consider that potential opportunity, Tim. So in the meantime, email me so that we can get some more specifics. And instead of me sharing with you what we can't do for you, we like to focus on what we might be able to do for you. So email me those specifics, Tim, regarding your post at 11:39 in the chat box. And again, my email is Angela, Angela, @rehabwallet.com. And you can find brief little bios on our entire team on our website, rehabwallet.com. And I think that takes care of everything in our chat. Got one additional question. I just keep making more time, you guys. I'm not sure. Let's see. What is Rehab Wallet's future growth plans? Ivan, you and I could talk about this for days and months. But big picture, for 2023, our goal is to achieve 125 million in loans, to maintain our 85% repeat borrower rate, to continue to ensure that our team feels empowered to not only consider new borrowers, and give our investors the opportunity to earn 8% returns. So hopefully that gives you some insight of what our future growth plans are. We do consider lending in areas outside of South Carolina, North Carolina, and Georgia, which is our primary markets. I guess the good side of our business model currently is that the demand for our product and service is so strong that it's not required us to go much out of our front yard and our backyard. So hopefully that answers your question. I could talk for months about that, Ivan. But our main market will continue to be South Carolina, and our secondary markets currently are North Carolina and Georgia. All right, let's see. Frenchie, I am not sure specifics regarding, that's another great question. Is there a referral program in place? I think you're referring to the investment side as opposed to the borrower side. But on the borrower side, there's not necessarily an incentive for existing borrowers to refer other borrowers. But that is the key to our 85% return rate. So we're real fortunate that our business model has been such a great fit. And I think early on I shared with you that, Kelly's vision was to become the Flippers lender. And that's part of why and how Rehab Wallet came to be and came into existence 3 years ago. But there's not a formal referral program for borrowers. And if the question was referring more to the investor side, that might best be answered by emailing Rob Gallo. All right, you guys, I think we have gotten to all the questions in the queue as well as the webinar chat. I really appreciate you guys tuning in. And I hope y'all have a great rest of your day and great rest of your week. Thank y'all so much, and have a great one. Bye-bye.